3 out of every 1,000 deposits ever become producing mines. It's a harsh reality, but it's the truth. Mining is a profession. It requires people skills such as leadership, charisma, networking expertise, the ability to raise funds, assemble a team, deal with local authorities, master budgeting, understand commodity cycles, know how to automate and create modern business procedures, and it ultimately requires having courage, commercial sense, passion, and a contrarian outlook. That's why looking for an entrepreneur who possesses these skills is the first part of the due diligence period that you must conduct in order to capitalize on natural resource wealth. It's easier than you think. Success leaves clues, as Tony Robbins says. First quantum, first majestic. One man is behind the mega success stories of these billion-dollar businesses, Mr. Keith Neumeyer. His newest billion-dollar candidate is First Mining Finance, the only mineral bank in the Northern Hemisphere. He has also taken sizable positions with Zinc One, Silver One. Keith has made ordinary investors millions of dollars. He is the millionaire maker. His newest venture could be your ticket to wealth. Go to wealthresearchgroup.com/Keith2017 for an in-depth breakdown of the intrinsic values of his companies. Welcome to the Rise of Currencies show at wealthresearchgroup.com. In the past few weeks, we've covered many topics within the roaring crypto ecosystem, with interviews by Amanda Johnson of Dash, Adam Meister, Dave Scotese, Luke Dodwell writes for my partner Kenneth Amaduri at crushthestreet.com, Chris from Bitcoin in Your IRA, and today we have a returning guest. He's one of the original bloggers to single out Bitcoin as an opportunity, a speculative moment, the birth of an asset class, and he's reaping big rewards for his early goal. Trace Meyer is on with us. Trace is also a seed partner with Kraken, the crypto exchange, and runs a popular podcast of his own. Craig, Trace, how's life?
Oh, life's always good when the price is up, right? Last time we chatted, it was $1,200. Now it's $2,700. So, what's there to complain about, right?
Well, listen, man, it's good times for all, and I want to. I want to make sure that this interview is more like a police interrogation. I want to really drill you with hard questions. You're good friends with us and a regular guest on our show. And in the past 4 years, you've witnessed your own life, transform right in front of your eyes with this opportunity. And today's interview is really going to be like a nutcracker, as I've saved some big questions, some theories, some concerns, and big picture thoughts for you. So I want to start off with what gives Bitcoin and the other dominant cryptos of our time their value.
Well, that should be a pretty simple question from the Austrian School of Economics. We have the subjective value theory, which basically is that each individual is acting deliberately to bring about some ends, and that they then impute value themselves. So every individual is valuing everything in the world based on whatever it is that they personally think or feel. And so, it's this subjective value theory that a lot of people tend to miss, because in our regular economics curriculum, in upper education and whatnot, that they don't teach the Austrian School of Economics. They teach political dogma, and so it can become very problematic because you get these bad ideas and you're using them as premises. And even though you may be able to reason correctly, if you reason correctly from an incorrect premise, then you're still going to get an incorrect conclusion. And so you have to start from the proper premise. Bitcoin definitely comes out of Austrian economic school thinking in a lot of how it operates in terms of the game theory and the economics. And so, yeah, it's Austrian Economics 101, subjective value theory. Each individual is what is imputing value to a Bitcoin. And a related note to that, each individual defines what a Bitcoin is to themselves. And they do that by running full node software. They're running software that enforces rules and determines whether a block or a Bitcoin is actually valid as a Bitcoin according to the rules that they run. And so then it's a way that we come to a distributed consensus about what a Bitcoin is, and also how that Bitcoin is to be valued. But it's subjective value theory when we're actually valuing the Bitcoin, but it's also subjective in actually defining and determining what a Bitcoin is to us. And that's based on our full node that we run. We either have a peer-to-peer decentralized currency, which means that we're all running our full nodes and then coming to distributed consensus, or we don't, and we're relying on some third-party ledger that is determining what a particular ledger entry is.
I'm very happy that you started the interview this way, because it's an important distinction, and I actually just released an email about that to our subscribers about the value of cryptocurrency being what people deem it is valued. Most people think it's the technology. Well, there's 750 altcoins out there, and they all have great technology, but most of them are worthless. So it's definitely not the technology part. Some people say it's it's private. Well, sure, it is private, but when you buy on an exchange, you have to give away some of your details. So it's definitely not only that privacy. People say maybe it's because it's limited. The limited amount, but if you and I were the only ones owning the rare set of remote controlled pens in the world, that doesn't mean that their value would rise every day. So being of limited amount doesn't just guarantee that the price goes up. So what you're saying is that Bitcoin is anything and everything that people say it is, and that's the value that they attach to it. It's a free market. Besides what the value is of Bitcoin and any of the other cryptocurrencies,
or any asset for that matter. Now, the points that you raised there, those factors. Those are factors that people may find valuable to accomplish some particular ends, right? Because humans are acting deliberately to bring about some ends. That's the base premise that we argue from with the Austrian School of Economics. And so if somebody wants to transfer value over a communications channel, hey, guess what? Bitcoin is the best, the most efficient. It has the largest scale, the largest liquidity, the best security, the longest track record in order to do that. And that's primarily what people are, that's what you do with Bitcoin. You effectively take a gold bar, you melt it down, you send it somewhere else, and then you recast the gold bar. And you know with 100% assurity that the gold is the gold, right? Because you're enforcing these network rules. And right now, Bitcoin is settling something like 50 tons a day worth of gold. Value of gold in terms of this settlement aspect of it. And so, yeah, it accomplishes means for people to transfer value over distance, which is one of our primary reasons for money. Now, there are other reasons for money, such as portability, durability, transactability, limited in amount, store value, all of these things. But Bitcoin is so much more than just currency. You can think of currency as just one app, right? And Bitcoin, we're going to be able to have thousands and thousands of apps. Currency and settlement value just being one of those apps. And so, when we're looking at thousands and thousands of apps and ways that you can use Bitcoin to accomplish particular means or ends, people can come up with lots of different ways or methodologies for valuing Bitcoin or them determining what they think a Bitcoin is worth to themselves. But at the end of the day, there's only one price that matters, and that price is the market. And that market is coming to a distributed economic consensus about what the value of the Bitcoin is, just like markets come to a distributed consensus about what the value of pretty much all other assets are. Sure, there can be some interference in the short or even medium and long terms via governments or whatever, but it is this market action. Wherever we have individuals acting deliberately to bring about some ends, we have a natural evolution of a market. And that's just That's just how humans function.
Trace, when someone is paying 2,000 or 2,100 or 2,400, whatever the price is, the day that the people listen to this interview, or maybe higher, maybe lower, whatever. When somebody pays for a coin, what does he own exactly?
Well, that is the $2,700 question, right? He in effect, hopefully he's holding the private keys, right? And the private key is a string of numbers, and those string of numbers, that prime number that he holds, enables him to solve a math problem, to then move those unconfirmed transaction outputs, those transaction outputs, UTXOs, from one address to a different address. And what I mean by address is a public key, from one public key to another public key. So at the end of the day, when somebody's buying a Bitcoin, they're really, what they should be buying or taking possession of is a number, like 7 or 15, but it's a lot larger number than that, right? But they're taking possession of a number, and then that number enables them to solve a math problem that the Bitcoin network that everybody else comes to distributed consensus on, that transaction is actually valid. So they're in effect, they're buying this dominion or control over being able to update this ledger that everybody else agrees is the Bitcoin ledger. So, there is some circularity to the argument, because we have to have this distributed consensus, but the distributed consensus starts from the individual enforcing particular rules with their full node. They enforce both network consensus, and then they're protecting their private keys with their full nodes. That's kind of what you want to be doing. So that's what somebody's buying when they buy a Bitcoin. At the end of the day, they're buying a prime number. Now, whether they have possession of that prime number, or whether they leave that prime number in the custody of a third party like Coinbase or Kraken, that's for each individual to decide. But what we've found is that third parties are not very good at keeping secrets. And guess what? You need to keep that number secret, because anybody who gets that number can interact with the Bitcoin network, solve that math problem, and move those Bitcoins from one public key to another public key. And so that's how people steal Bitcoins,
Sure. So, your description, if I try and simplify it a little bit, when you opt in to this community that has 21 million components, you actually own one of the components. You own a stock inside of a 21 million stock pool, and that stock allows you to transact with other stockholders. And even someone that is outside of the community and wants to opt in and get inside of the community. So obviously, if you want to purchase something, you can use your Bitcoin to purchase some things. Microsoft, Amazon will probably start doing it soon. Correct?
Well, you can already use Purse.io to trade Bitcoins for buying stuff on Amazon. But it's not a perfect analogy, but it does get a little bit closer. We've got the 21 million Bitcoins. They're actually composed of 100 million Satoshis each. Satoshi is kind of the unit of account. And these are actually units that are used within the Bitcoin protocol, right? Because this is an internet protocol, kind of like HTTP, Hypertext Transfer Protocol. Now, when we're dealing with and when I mean analogy, we have domain names, right? Like Amazon.com, eBay.com. In this case, we have ICANN, and ICANN has this ledger that says that eBay.com will actually resolve to a particular IP address. And so that's how we route around the internet and actually get to eBay.com or get to Amazon.com. We go and look up the DNS at ICANN, and then we go to a particular server that then has eBay's website on it. And so Bitcoin is similar in that regard, except we have fungible units or hopefully fungible units of Satoshis, and 2.1 quadrillion of them make up 21 Bitcoins. And then we're able to send around these Satoshis. So it's kind of like sending around domain names, which you can transfer those too, except domain names are much more unique, right? And therefore much more valuable. Some of them sell for tens of millions of dollars a piece.
Sure. Trace, I want to talk to you about a very touchy subject that is now circulating. Started in Russia, now it's in the U.S. as well. Taxation on your Bitcoin profits, on your cryptocurrency profits. What are the implications of this? How are you supposed to relate to this when you file your taxes yearly? What are people doing, and what do you think the Congress is proposing? Because I know that they're moving forward on initiatives regarding this.
Yeah, I mean, that's a whole can of worms. Of course, I'm not going to give any tax or legal advice. Everybody's got to handle their own way of dealing with it themselves. Personally, for the most part, I just hodl my Bitcoins. That's Reddit speak for hold them. That way I don't have any tax recognition events. When I do, I usually just claim it as ordinary income, which is at the highest tax bracket. So how's the IRS going to argue with that, right? I mean, okay, make me pay less taxes. That's great. Maybe I get a long-term capital gain instead of an ordinary income. That's how I do it personally. The IRS has issued guidance. Nevada, for example, just a couple days ago, the governor of Nevada signed the bill that got passed by the legislature that there will be no taxing of blockchain stuff in Nevada. So you've got state taxes, you've got federal taxes, you've got VAT taxes. Like in UK or Europe, they're not. I don't think they're necessarily even applicable to Bitcoin. Japan just passed a law April 1st, which makes which has tax ramifications and favorable ones towards Bitcoin. Singapore, MAS has actually issued different guidance and whatnot, which is very favorable towards hedge funds. Isle of Man has passed legislation in this regard, which is extremely favorable to Bitcoin and blockchain technology and businesses and stuff. And so, I mean, your question is way broad. It's like, because we have 200 plus countries, every country has their own laws. The laws are changing all the time. I do find it funny that these senators are yelling at the IRS for not having a proper Bitcoin strategy, because I just find it kind of funny. But yeah, it's people should pay their taxes if they don't want to have to look over their shoulder. Is everybody paying their taxes? Maybe, maybe not. Probably not. There probably are some people who aren't, either through ignorance or whatever. But yeah, I mean, it's it's always fun when you're dealing with the tax issue.
Now, I want to ask you, why not, or is anybody working on merging the cryptocurrency and either the gold standard, the silver standard, or backing cryptocurrencies with any tangible asset? Obviously, doing that will gratify the cryptocurrencies with much more assurance for many of the people that are terrified that cryptocurrencies is basically an internet protocol and nothing else.
Yeah, I mean, your question is kind of like, well, how big is yellow? And I think we should make yellow really big. That is not how it can't work that way from the technology. How do you turn gold into data? You can't turn gold into a number. Gold is an atom, right? So that's part of the problem is when we're trying to establish trust. How do we do that? How do we go about establishing trust on the internet? And that's really what Bitcoin's about. Bitcoin is about being able to establish trust. So if you wanted to transfer ownership of gold, I mean, how are you going to do that in a secure, trusted way? Well, you could use Bitcoin to do that, but you're still going to have layers that and you're not going to be able to do it with solely dry code. You're going to have wet code. And what I mean by that is dry code is computer code, and wet code is code that runs on a human. So you have a bunch of lawyers and governments. That's wet code, and so the rules that are running through a lawyer's brain, that's wet code being executed. So you're going to have audit reports, and you're going to have custody agreements, and you're going to have vaults, and you're going to have all this stuff that's running on wet code that then you can abstract on top of the dry code somehow. To get further into this, I'd highly recommend people listen to an interview between Tim Ferriss and Nick Szabo. Nick Szabo invented Gold, and he came up with the whole idea of smart contracts, which plays right into this idea of trying to have bringing other assets running in the wet code environment into a dry code environment as much as possible, so that you can minimize the areas and the points of contact needed for trust, which will increase social scalability. But I mean, at the end of so that's kind of, it's not possible to really do that. Have people been trying to do that? Yes. We have a company called Vault Oro in the Bitcoin space that kind of trades Bitcoin for gold. And then I actually have a friend of mine, his father was in a wheelchair, James Blanchard, waving around a gold bar when it was illegal to own gold in the U.S. And then he founded Blanchard and Company, one of the largest gold dealers. Anyways, this Anthem Blanchard started Anthem Vault. And they've issued this Hayek coin, which is where they're trying to have this interface between wet and dry code with cryptocurrencies and gold. So I actually find that very interesting. I introduced Anthem to Bitcoin and everything, and I've been a big proponent of gold, and so I've helped him, kind of brainstorm this idea with the Hayek coin and being able to interface gold and the wet code and the dry code environment. So, but I don't know how we can really solve that issue solely from a technological point of view. I think that we have to have some human type intervention in order to actually make that work, which introduces a huge attack surface and attack vectors, and and that becomes problematic. It's not just code that's executing.
Sure. Trace, let's do a mind game and theorize here. Cryptocurrencies are competing currencies to fiat currencies. They're an alternative system and have no relations to any government. And now governments are starting to intervene. When is the tipping point going to arrive when governments must publicly address the situation where money is being sucked out of the out of their economy and into this new economy?
Yeah, I mean, it's already happening. We see the U.S. Senate in 2013 came out with kind of a Bitcoin strategy. China, Russia, Singapore, Isle of Man have all come out with positive pro-Bitcoin strategies. Switzerland, Japan, a lot of them have actually passed legislation making it legal. As far as like sucking money out of their economies, I think that it might actually be the reverse. If you speaking from a government point of view, if you enable this convertibility with Bitcoin, because Bitcoin is so, it's very portable, it's censorship resistant, that becomes something you can really back your money with, right? And so if you can freely move in and out of a fiat currency into Bitcoin, that can actually strengthen the fiat currency. Because it gives people more confidence in being able to. It gives people more confidence in being able to trade that fiat currency for something of value later. It's when you start introducing draconian laws like in Venezuela or Argentina that people say, hey, maybe I don't want these bolivars, maybe I don't want these Argentine pesos, and it strikes at the root of confidence that people have in those units. So as long as the governments are being somewhat friendly towards Bitcoin, it lends additional confidence in their particular units. And after all, what do they have to be afraid of? I mean, why should they be afraid of Bitcoin, right? Like, and that's the only reason they would want to introduce any type of draconian legislation, is if they're afraid. But if their unit of account, if their currency is so good and so strong, then what do they have to be afraid of? So, if they are afraid, well, maybe we should be afraid too and have less confidence in their unit of account. And that gives more reason for people to move into the cryptos. So the government's they have a fine line to walk between, trying to maintain market share with their fiat paper franchises versus having this additional competition coming into the market. And at the end of the day, hey, look what the internet's done to cable TV, to newspapers, to radio, to postal mail, to so many industries. We're going to see another round of creative destruction that comes about because of all this financial innovation, which has been retarded and held back because of all of the financial regulation that stifled it. But governments are creative and sometimes, and they'll figure out a way to survive, most likely. It just might not be in their current size or shape or form.
Understood. It's a good point. I want to address another issue with you. Throughout history, when humans transact, they loan each other money. They use leverage. They use a lot of procedures and instruments that have to do with loaning in order to advance the economies. There are countless businesses that we wouldn't have enjoyed their products had it not been for loans and the ability to move credit from one to another. Is that ability possible within the crypto ecosystem?
Well, sure. I mean, the crypto ecosystem is equity-based for the most part. It's an equity-based asset like gold, meaning that it's nobody's liability. When you're dealing with these fiat paper franchises, it's a Federal Reserve note. So it's actually a liability of the Federal Reserve. What are they liable for? Well, actually nothing. That's the great confidence game, right? And so our current worldwide fiat and monetary system are debt-based, as you've kind of brought up. This has distorted the interest rate signal, the interest rate price signal. To more readily understand this topic, I'd recommend The Theory of Money and Credit by Murray Rothbard. It's only about 1,050 pages or something like that. Read that. That'll help you understand. That'll help you understand how this stuff works. And so when we're dealing with interest rates, we're dealing with regulating production over time. So yes, we being able to allocate capital between savers and entrepreneurs and doing it with the pricing mechanism of an interest rate does help us get some businesses capitalized or funded or off the ground. The assertion that we have things in our economy that we wouldn't have if we were on an equity-based monetary system, I think is fallacious. I think that assertion is not necessarily the way things are. In fact, because we've had a fiat currency and fractional reserve system, we have misallocated capital on a huge, grand scale. We've misallocated capital, and the capital has been misallocated at the time it was allocated, right? And so now it's just a matter of marking to market all of that lost value. And if you're gonna argue that we haven't had a bunch of destruction of wealth because of this, 2007. If capital was being allocated so wisely and so well, why'd they all need bailouts to the tunes of trillions of dollars, right? So they have destroyed trillions of dollars with our current fiat and fractional reserve banking system. And what has been the result of the destruction of that amount of wealth? Well, guess what? We have so much wealth in our worldwide economy that has been destroyed that we have so many businesses and so many inventions and so many other things that just haven't been realized because of that. So our current fiat fiat and fractional reserve system has actually retarded and stifled the growth of humanity to a tremendous degree. Like, that it might not even be fathomable how big of a degree that is. To give an idea of how big it might be, let's look at the price of gold. When my father graduated from college, he took a job. It paid $900 a month. That $900 a month would buy 25.7 ounces of gold per month, or about $500,000 a year in today's value. And yet we have kids coming out of college that can't get jobs or are making, what, $50,000 a year? So there's been a destruction in the standard of living in about 90%. I mean, it's absolutely absurd how much wealth has been destroyed and absconded from just the average people by the current fiat and monetary systems. And, you know, that's how much people should be making coming out of school without any work experience. Should be about $500,000 a year to, you know, $500,000 to $600,000 a year. But, you know, all this productivity that we've had from the internet and the rise of the personal computer and all this stuff, that rise in standard of living, for the most part, has not accrued to the actual people. It's accrued to those institutions that are much closer to the source, the central banks of this fiat and monetary system. And so they've reaped the rewards. They've been able to privatize the gains and socialize the losses. And so, you know, that's how I'd kind of attack that question is we're, you know, the current debt-based monetary system has harmed humanity to such a degree that it's absolutely absurd that we still put up with it.
I agree with you completely. So let me rephrase the question. Let's say you and I both agree that I have a great business idea and I need capital and you have the capital. How would you create a lucrative win-win inside of the cryptocurrency space where you can lend me the cryptocurrency so I can begin to purchase and operate a business?
Yeah, I mean, that would be an entrepreneur would do something like that. And I think we already have several operating businesses that do that. There's bitbond.com, there's BitLending, I think. Salt Lending is coming out pretty soon. They're going to let you, Bitbond lets you take out loans denominated in Bitcoin, and you have an interest rate. And so they kind of act as the middleman between the lender and the borrower and the creditor. So you know, we've got these nascent credit markets that are forming. Then saltlending.com is a really cool idea, and it's where you're able to stick your bitcoins into a multi-sig address. So there's the lender, the borrower, and the arbitrator, and then you're able to draw down a line of credit denominated in fiat currency against the value of the crypto assets. And so that's really cool, because then you don't have recognition events, right? Because you're not selling your Bitcoin, you're just basically pawning it. But it's very liquid collateral, so you know the interest rates on the fiat should be able to come down quite a bit. So you know, we're going to see lots of creative entrepreneurs attempt to solve this problem of figuring out the price for money, so that savers can earn a return on their money, and so that entrepreneurs can take risk and borrow money and put that capital to effective and efficient economic use.
Are we going into a period, Trace, where money will not be controlled by governments?
Oh, that's a great question. I don't know that money's ever been controlled by governments. I think that we need to get a little bit more specific on our terms. We have currency, which is what we use in our daily transactions.
I mean currencies, yeah.
Currency, and then there's money substitutes, and then in my book, The Great Credit Contraction, that I wrote about 8 years ago, I came up with another term called illusions, and these are just complete illusions. They're not really anything at all. And so so dollars, euros, yen, they're all illusions. They're nothing at the end of the day. Like, they're not even so money, like, what's money have to be? I make the assertion in the book that money has to be something that's limited in amount by its intrinsic characteristics. So gold, which is limited by chemical law, Bitcoin, which is limited by numbers, they're tangible. Both of those are tangible. One's corporeal, one's not. Those would be examples of money. Then a money substitute would be a gold certificate, which is what the U.S. dollar used to be. You could take the U.S. dollar to the bank and you could trade the piece of paper for a certain amount of physical gold. But Franklin Roosevelt decided, hey, that's not such a good idea, made it illegal to hold gold. Richard Nixon said, hey, the French, we owe you a lot of gold, but no, you can't have it. Because they actually sent their destroyers over to pick up the physical gold, and the U.S. wouldn't give it to them. So that's an example of a money substitute. And then now we've got illusions. So ever since Richard Nixon severed that gold standard, we've been using illusions, which are just, who knows what they are? They have some value because individuals impute value to them, subjective value theory, but they don't actually have a definition. I
guess it's because they're forced onto you by law that you immediately assume they have a value. But if they weren't if they weren't lawful, if I was just handing you, hey, here's a note, there's an institution called the United States government, they issue this, here you go, I want something. In exchange, you would start questioning it for if you didn't know this was a law, and if you didn't know what the U.S. government was. There is no way to explain what the value of it is. It really is. It's sort of
there's no way to define it, right? And in fact, in the law, the definition is unintelligible. As an example, 31 United States Code 5101 through 5118, we have some of the monetary provisions. A U.S. dollar is defined as 371.25 grains of 0.999 fine silver. It's also defined as 1 ounce of fine gold is equal to $50. 1 ounce of fine platinum is equal to $100. But last time I went and looked at the periodic table, 50 ounces of silver does not equal 1 ounce of gold. That's just unintelligible. You get an F in chemistry class if you put that down as an equation on your final exam, right? And yet the United States, that's the law. That's the law in the United States. We've got wet code that is completely unintelligible when put in contrast to chemical law. And so, no, the monetary law in the U.S. makes absolutely no sense. And the unit of account, the dollar, that's the world reserve currency, it has no definition. We're talking about the atom that goes into coming up with all the financial structures that we've built all over the world. The atom has no definition. Humanity has got itself into a really big problem. Bitcoin, guess what? It's got a definition, right? That definition, it's run by full nodes. When you run a full node like Bitcoin Core, you're enforcing that definition. So the current financial and monetary system, I don't know that they can handle being regulated by Bitcoin with such precision, right? Because it's it pulls back all the curtains. It says 1 + 1 = 2. It's very easy to make 1 + 1 equal whatever you want it to be when there is no definition for one, right? And there is no definition for the dollar. So we've got a big problem with our financial and monetary systems because of that.
Trace, I want to, in closing, ask you this: the cryptocurrency ecosystem between the different coins. There's competition, correct?
Yeah, of course, because people are acting deliberately to bring about some ends. There are lots of entrepreneurs, lots of developers. They're going to build coins that try to solve different use cases more efficiently or effectively. We get a wide diversity of species that arise out of this market process. which is good because of the knowledge problem that Hayek talks about.
Sure. Now, the ultimate end of the cryptocurrencies is to transact, correct?
No, the ultimate end is whatever the individual wants to accomplish. And they're going to, they'll use a cryptocurrency to accomplish their ends. That ends might not be transacting. Perhaps what their ends is to put some type of information or data in the blockchain so that it becomes immutable. Maybe they're a whistleblower and they want to put the whistleblowing documents into the blockchain. So they're not trying to transact with anybody. They're trying to anchor some form of data into the blockchain because it's immutable so that it can't go down the memory hole. Maybe that's what their means or ends is. Right? And so, we don't know why people are using the blockchain. Like all of our Chinese miners, for example, like Bitmain, they're keeping copies of all the Tiananmen Square stuff on their computers in mainland China. How cool is that, right? They're standing up against the PBOC and the Communist Party by hosting all of this data and information with the immutable ledger. So we don't know exactly why people are doing what they're doing when they're interacting with these different blockchains or currencies. Transacting in terms of using it as a currency, medium of exchange, yeah, that's a very easy abstraction that we're able to get our hands around for why people would be using the protocols in that way. But it is not the only reason people use these protocols, not by a long shot.
Sure. I mean the currencies now. When you
you're calling them currencies, but they're really protocols, right? And currency is just one application of that can be built on top of or used on top of that protocol.
Yeah. So when you use these currencies, one of them, for instance, becomes more popular, such as Ethereum is getting very popular right now. Why do you think the shift is happening with all these different currencies? What attracts people to one type of protocol over the other at particular points? Is it because that it's new, or is it because it's really different, very different between each other? There's many noticeable differences between the protocols.
Well, usually it's because people want to make a buck, right? So it's speculation. Yeah, but there might be technological differences or just a whole myriad of things. You've got Dash, you mentioned earlier. A new one that I'm kind of particularly interested in is PIVX, PIVX. It's so there was the Dash team, and they wanted to focus on anonymity and privacy, but then Dash decided to go off and build AML KYC very much right into the middle of Dash. And so this PIVX team, they broke off from Dash to focus on PIVX, which is private instant verified transactions, to focus on that, to focus solely on the privacy and anonymity. And then we've got others like Monero, which implement ring signatures, and we've got Zcash and Zerocash, which are trying to focus on this privacy niche. So, it really depends on the means that people are trying to accomplish, what they're trying to get done. And that's what really kind of entrepreneurs, they'll step up and start trying to build that solution that the market is demanding.
Trace, it's been a real pleasure. I really want to thank you for taking the time to be with us. These have been questions that have been accumulated for months from subscribers who sent in questions, and I'm really glad that you took the time and you were patient and answered everything that we had. Thank you very much. And now, can you tell people more about where they can check out your podcast?
Yeah, thanks so much for having me. Always glad to be on the show with you guys. And my podcast, it is my podcast, but really I try to interview a lot of the top CEOs in the Bitcoin space. So it's really to give them the exposure and see what they're working on. Anyways, it can be found at www.bitcoin.kn. It's the Bitcoin Knowledge Podcast. And once again, just thanks so much for having me on. Glad to answer all your questions, even if they're a police interrogation and they're hard, right? We like hardball in Bitcoin. You got to be good to be in this space.
Sure. Well, thank you very much. Thanks for taking the time.